What's going on, everybody? December 19th, Peter here at Forte Trader. How you guys doing? Okay, it's been a little crazy. Happy holidays, by the way. It's been crazy. My wife and I were in Mexico, obviously taking trips during all this COVID stuff. They say high risk, but nobody's out there. And so if you're willing to take a little bit of risk, stay clean, sanitized, safe, healthy, like my wife and I do, work out, you can help prevent a lot of the getting sick or whatever I may say. But anyway, I don't want to get into people getting upset about this stuff. It gets sensitive, just like politics now these days. So let's talk about trading. We did a lot of spreads here at Forte Trader, but I've introduced during this whole pandemic deal in the last year, said, well, volatility is great. Intraday opportunities are there. Why not just go ahead and start, trading that? Why are we leaving all this great money on the table intraday, especially with micros out there, micro futures that are available? And again, in the future markets, low cost barrier entry into these contracts, okay, because of the margins and stuff. So, it's why are we not going to do it? Sometime we haven't been able to find the best spreads. So I'm going to go through how I do my day trade, kind of like my intraday preparedness before I go into the markets. There's a few markets I look at right now currently in trade. It's ES, NQ, and crude oil. And my top biggest time frame I like to start with as a day trader, as a scalper, and then as a semi-algo trader is a 15 or 30 minute for my volume profile. Okay, I'll make a little bit of a series for this. In fact, also I'm going to add a sub channel inside this YouTube channel for just a basic foundations course for people that want to at least learn directly from me, basic futures that are new at futures. And then from there, I'll lead people into this stuff and explain to you what I'm doing. Okay, so I'm using a volume profile. I'm using prior day high lows for my key levels and pivots in my 15 minute or 30 minute. That's it. I do have a stochastic at the bottom. I don't use it a lot. I'm referencing a few things already that are good enough for me that have been working really well in this intraday plan for me to gauge and know where my levels are going to be. So I have my start of the day, and then during the day, this is cash session because volume profile builds up during Glowback, so it is cumulative, so you don't really know. Good thing is at least it's not subjective, so like my idea cannot change from someone else's idea. I mean, this is just a subjective volume profile that we're using, and as it builds up and gets into London session, and we could start seeing some formation and start getting ready and prepared for areas, especially with our pivots. They reset every day. We also use VWAP anchors, but not in this chart here. Excuse me. With that said, when I come into the morning, I'm already looking at somewhere around here, and I'm looking and seeing that we're already hitting and testing, for example, yesterday, prior high of days. And of course, as you see, we had a nice drop down on ES all the way through S1 and S2, and where we created a ton of volume. Towards the end of the day, you saw a beautiful volume balance formation on the volume profile. And when we bounced off S2, we started seeing even divergence on our stochastic for those guys that like to do divergence. And we had a nice run back up, finishing to the top of the prior high of day. Beautiful chart action here looking at it. Now, some guys say, oh, hindsight, you're looking at hindsight. No, we're trading this forward. Okay. I found out that a lot of people had talked BS. I was talking with some guy on Facebook earlier, and it turns out that he's just a software provider for order flow. Of course, I'm not going to, like this if I'm selling you a product to look at something else. So, people talk shit out there. This is just getting on my, I've learned to just stop dealing with people. They're like children. It's like you tell a child, candy. No, you have to have a healthy salad today. Candy, salad, candy, salad. You're not gonna convince a kid. So then I started realizing, F them. I'm going to do my thing. This is Forte Trader. We do real trades here. We make real money. We're real traders. We're not fakes. I'm not going to play with and argue back and forth on Facebook with software providers and traders that are aspiring and aren't making money. So what do we do now? Once I know where my areas are, I want to go short from a key area or long from another key area, then I'm going to go look at maybe like a smaller time frame, like an 8 range, where I have my VWAP bands and I have some linear regressions. Linear regression is dynamic. It's happening as as the market's running. So earlier in the morning, all we were was downtrend. Our linear regression bands were set up for like a 250 setting or 200 if I'm not mistaken. If it was any higher, all it was doing is it was going to expand these bands all day. I have them set at a special setting. And all it does to me, all I'm looking for is I want to gauge, are we short yet? So in the morning, coming off, we see we're at the top of the VWAP bands. We know that we were looking at possible shorts. We see a lot of momentum dying off over here on our stochastic. Many probable reasons why we're going to open up short, and sure enough, we did. Then what do? Knowing that by then our linear regression lines and everything were short, we're at 3 standard deviations on VWAP. Guys and gals, this is all intraday trading tools. Everything is different. You got to look at everything with the scope of the what you're doing. Okay, there's tools for what you want to do. You want to be a swing trader, you got to look at different macro time frames. You want to be intraday, you got to look at these things. You got to understand what other people are looking at. You can't just be an Italian chef inside of a Mexican restaurant. You guys are going to have some conflicts there with your spices. So then what am I going to do is I'm going to come into my algo. I got this algo scripted and designed from my coder. And about 8:30 that time in the morning, I'm going to come in here and I'm just going to turn on shorts only. I don't have to take longs. I have certain rules here with super trend, Renkos, and 2 moving averages. And there's rules in here I'm not going to share on the public channel yet. And then I would have just turned on my shorts only. And as soon as this market opened up here, we had a nice big short here. Because I also have ATM strategies in there, I would have probably already been taking profits very quick, because that's why my performance has been really good. I don't take long runs anymore at them. I just take 1 to 3 contracts on a ATM strategy, and I basically let it auto manage from there. That manages my emotion, that manages my money, that manages all the things that for years I couldn't manage on my own. So, yes, are we going to look then hindsight and say, man, I left all this money on the table? Who cares? With our strategy, you just made anywhere from $600 to $1,000. Who cares? Don't be greedy. For a long time, greed started making me afraid. And they say that 2 emotions in trading is fear and greed. And it's true. Because one, I was afraid when I started overcoming my fear. I started realizing I was more on the greed side. I started trying to sit here and how I'm going to maximize these markets. And then I'd be afraid to actually just be like a real true intraday scalper and have a good set strategy, get my money and go. You can't be greedy. And then as a result of that, and not being able to perfect a strategy because I wanted to take all the meat off this bone, I would end up not making money. And then it would make me afraid because then I didn't figure out a good tactic and a good strategy and how to do this stuff. This stuff, it gets more complicated than swing trading because, it's not set it and forget it at a high area like we had on our future wheat corn spread 2 weeks ago that hit a support level and made a nice 20 points and you were just done. I mean, it took 3 days and you made your $2,000 for every spread. For those of you that are following me, you know what I'm talking about. Here, we would have taken a nice short. Here, I wouldn't have probably taken longs. What am I doing? Let's reset. That's our day. You would have already had this template here would have already made your money on ES. Let's go into NQ. NQ is the same thing. Equities kind of do the same thing anyway. So if you saw NQ over here, you didn't see any divergence here, but we were at these tops. We were testing the prior high of days up here. And of course, if maybe ES took a good lead, you can see that chances were we were going to take this dive first thing in the morning. And we did. We tested all these lower levels. At least we're going to come back down into the pivot. You could at least anticipate into the pivot area, which is easily, guys, like, let's see, 37, 30, 50 points, 40, 50 points. An average true scalp trader would have been done just right there. You're done there. Okay? You're done. You could have come in maybe later in the day and try to see where we were for another high probability trade back up, which definitely happened when we tested S1 here. I posted this on Twitter. It actually broke down more. So most people probably went long here at S1 and then got tagged out and their stops hit and then retested in S2 if they were brave enough to hit it again, or the pros come in here and took advantage of this move. So what do we do with that? At that time, our 22 range NQ would have been showing us here where I have this non-dynamic one, all short, all morning. So what would we have done? We confirm now on our range bars, on our VWAP bands, we're overextended 2-3 standard deviations. Our linear regression lines are short. Come in here. Sorry guys, got cut off there. Okay, so you would have come in here and just turn on, your shorts only. And now you could have manually traded this stuff, or you just turn on, your algo if you have one. I know I'm perfecting this one. It still has its flaws. I mean, it wasn't a big investment either, but based on the rules, you would have taken your short trades here, all your short trades here. You would have been done a long time ago, and then you let your ATM strategy, which NinjaTrader is good for having a really nice ones in here. Manage your trade, manage your emotion, manage your money. That's it. On this particular template, I have it running on NQ for a 60 tick winner, 30 tick. So it's a 2-to-1, 30 tick loser, and I'll run 2 contracts. So it's risking, what is it, dollar wise, 300 to make 150, something like that. So that's that. Coming into crude. Crude, we could see from VWAP. Once you guys start learning, volume profile and all that stuff, you could start seeing by morning time, early morning time, what was going on here. We were in this tight range. You wouldn't have seen the P-shaped formula here. Crude oil went long late in the morning on the catch session. You would have just seen this nasty tiny range here, which was being respected by the volume that was trending here. This was a balanced volume profile the day before. We had shorts, long, short, and that was it. Trust me, a lot of people that know how to master this did really well. And so we were doing the same thing, and then we broke out. So when we broke out, we were just pretty much long all day. Well, what can save us on that? We were long all day here on the 4 range. We know that we could see that. This carried almost the whole session inside the 4 range for crude oil, and we had a bounce, bounce, bounce. You could have just traded the linear regression lines with the standard VWAP line being down here. You can just tell automatically crude is on a long trend for the day. The algo, how would it done? I'm still working on this one, the settings. As far as the Renko settings and everything like that, I haven't automated this. I did a quick test yesterday and did okay. But for example, here at 9 a.m., your algo would have picked this up as a long, and then you had a big winner there. I mean, 30-cent legs inside of crude oil is very normal. 30 cents, $10 each, that's $300 per contract. You could run maybe a 25 tick take profit, maybe a 15 tick stop, and this thing I'm almost certain is going to do good on crude. I haven't sat here and turned it on and watched it all week. So you could do it manually. As far as the strategy, guys, this is how I do it. I'm going to be sharing a little bit more of that. Maybe, I don't know, at some point here, I'll start just doing more of these. You guys can just pick it up. For those of you with experience, you could figure all this out by just watching what I'm doing. Another thing I'm going to do is start to try to apply the volume profile to high liquidity spreads. It's possible. Let's go ahead and just take a look. Let me move this over to some spreads. I haven't updated these to see which ones of them are still active or not. Now, excuse the range bar stuff on the other side here. It's not going to reflect. Spreads trade a little bit differently if they're kind of thin. This is a NASDAQ ES spread that I'm keeping my eye on because other people trade this and they've been asking me about it. So I'm just keeping my eye on it. But we could still see, was it tradable? Could be. I'm still a little speculative on equity spreads. I like physical delivery spreads because they just have their cost from one calendar to another has 3 or 4 different elements versus just interest. So I'm not going to get into that. So let's go ahead and get into just take a look at how even volume profile can work on some of these things. Here's a cattle calendar. Here's your daily profile. Here's your levels, your R3, sold back off into R1. Here's your point of control. I mean, it's still doable. At the same time, too, looks like on a 22 range here, this is too big. This is like a whole annual, looks like level with our linear regression, though, but we had an amazing sell here on this calendar. It's a 22. We can put it maybe into a 4, see what we get there. I'm testing this as I'm recording this video, guys. I'm making this as authentic as possible. Transparent as possible. Could have taken these longs here at 9:30 yesterday on this spread and made about 1.5 points. I wasn't looking at them, I'll admit it. I'm just doing the review now. This is a calendar spread, 2-month, 3-month wide calendar spread, guys. This is about a $400 to $500 move right here just on a calendar spread. And this is counting probably from where? from, this is 2 days. So this is a swing trade. You would have picked it up here at the bottom when on this profile we were testing a POC that looks like it stayed naked, and it stretches across and it bounced off that naked POC. Still hasn't filled that little POC there. But again, guys, TradingView doesn't have tick data. And so I've also found that running tick data on a more professional chart like NinjaTrader, I've seen naked POCs actually get touched and get filled. But still, there's pivots there. It looks like there is an S2 that it bounced off of and took off. And since then it was long, and you just had that nice little swing trade. Averaged yourself down a few $100 a day. This is cattle hog. Not the prettiest thing looks like in the world on a volume profile at all, but you can pick up here on a 4-range chart. Obviously you see an uptrend, and you can see our linear regression lines for about 2 days in a row bounced off of the standard deviations, and several times you had opportunities to pull, a point or two off each little leg. And definitely had a good short here at the top when we broke out at 8:30 in the morning on the 18th, which was yesterday morning. And you had a nice short here to the mean. So that wasn't that bad, actually. Could have taken that and just pretty much faded that back in on a spread. That's cattle hog. We might not have the best ones here. Some are good, some are bad. I'm just testing this out right here live with you guys as I'm recording this. You need some good liquidity ones. This is wheat, corn. We trade this a lot. This is the March contracts, and you see that in the morning all through London. It was just bouncing through this range, and there is enough liquidity where you could have been scalping this through 2 points each way. So it's $50 a point, so $100, $100, $100, $100, $100, and then broke down. Right before the market opened, which is usually picks a direction, U.S. cash session, and just sold on off. Now, how do we just know how long we're going to go, what we're going to stick with, what our targets are going to be? You don't. But you can look at maybe more tighter time frame like this. Like this is a 4-range chart with linear regression, and just follow, let's see, from the day before we hit these tops, we tested, you would have been short here. You would have been short at 180s, and yesterday it closed out by noon. Grains closed a little early back in the 167s. And this is a big play, guys. 179 and 167 is like an 11, 12 point move. Wheat corn spread typically does 10.7 to 10 points a day. And so this was a day where it demonstrated that and did it. So that would have been one spread. You would have had to buy 2 contracts to short. You would have shorted wheat, bought corn, and over here you would have covered. You would have bought wheat and then and sold corn. I'm sorry, you would have sold wheat down here and bought corn. You would have bought wheat to cover here and then sold corn to cover. So, I didn't see this. I wasn't looking at it. I've been on a different project and I've been trying to finish the automation, but this was a good trade. This was a very good trade. I wish I was watching this. Problem with multitasking, guys and gals, is and being even part of like Forte Trader, and I'm trying to tell some of my traders I'm close with that it actually is a hindrance, because you get involved in a lot of markets because people ask you stuff, and then it's just hard to even keep up. I highly suggest get good at one market and just trade one market. I've told people this time and time again. On my intraday system, 3 is already too much. 2 is probably too much. And QES is going to most likely do the same thing anyway. And then you have crude. So if anything, I should probably, focus. Is it going to be NQ or ES? And then just have crude. Because crude is almost a good 24-hour market. And we've been picking up some really good price action with it. Another trader and I during this week. And that has great opportunities with the way that we look at intraday opportunities. Just don't distract yourself with a ton of stuff. Don't get all overwhelmed. If something is a little bit too slow, it'll pop. And then what will happen is you would have gone somewhere else. And I'm telling you this from experience. You'll go somewhere else looking at something else. It doesn't really do anything. And then the thing that originally you were looking at does great. So don't do that. Try to just stick with one thing. I think this is a soybean crush spread here. And we can clearly see that this with the volume does pretty damn good. As far as volume profile, when it hits certain areas, you see that, it's funny that this guy that I'm not going to go there again, but you see how we hit these pivots. These pivots are drawn earlier in the day. So it's not like you're just making it up. And we hit these resistance R3, we bounce off S3 at 6:45 in the morning, open up the session, bounce off of R3, hit the point of control. I'm sorry, hit the prior day high. Yeah, prior day high, this blue line, bounce off of it because there's a lot of volume here. You see all this volume here? So these guys defended. They defended the area and back off R3 for another nice little short, down 5 more points. And you just clearly could see that and use this as your entry. Once you see that, come in here and use this as your entry and get this max area down here off these linear regressions, excuse me. Okay. I have this for my personal spread traders that have bought my spread course. I have it in the Discord group. I've shared the link with them. If anyone wants anything, just let me know. I plan on doing a foundation course here on YouTube, having it on a separate sub channel here inside the channel for people that are interested in futures, learning how to make money in the futures markets simply. I've been fortunate enough where I've had some good people around me teach me some amazing things, and I love sharing it. I don't like the headaches of it sometimes that people give me. I'll admit that, but I like sharing, trust me, because it took me a long time to figure things out, and lately now I got good people around me. We collaborate some amazing stuff. So, I mean, that's a spread trade right there. It's a soybean crush. This is heating oil versus crude. Obviously, in the nature of things here, you're not going to get the best charts on spreads, but we do in the higher time frame, 15-minute. You can see, real high probability trades where, areas got tested. Prior day lows, prior day highs got tested, R3s and stuff. So, it's, again, this is a spread, but it's still not that bad. Looking at it at 15, let's see what a 30-minute looks like. It's okay, not that bad. Again, you can see good levels being respected from the prior day. Combine them with 2-3 day profiles, and you might have a good odds of taking a good retracement trade, fading a trade, or going long short. But the areas and the pivots almost seem to be respecting each other. When things get to extremes, they're going to come back in, okay, because of value. People are buying and selling value. They're not doing anything else. This is an emotional market. This has nothing to do with the two fundamental things that are going on out there. It's all emotion. And these things are plotting potential emotions and reaction points of buying and selling. That's it. That's simply it. See if I got anything else in this thing. It's not going to be that. Nat gas spread, good luck. Heating oil spread. None of these things are going to look super perfect. They're spreads. I'm using intraday tools though to show you that on high liquidity spreads, you can use things like this. Volume profile, you could have traded this range. Here, could have taken a long off of S3, short off of R1s, tested prior high a day. Same thing up here, test prior high a day, R1, high probability trade, 178, down to 174. That's 4 points. And there's liquidity in this spread if you put it on a professional platform like TT and you put a synthetic spread on, you'll see a ton of volume there. You'll see all the big money hiding in there and you can play around with them. Same deal here, it's just ridiculously easy. And we can, again, guys and gals, go through the same setups. So this week I'm not going through and showing you guys probabilities of anything. I might launch a bar chart commentary tomorrow. If I see anything good, I'll let you guys know. Because we also have another, let's go through our bread and butter chart. There's our overall trend on 4-hour chart on a cattle spread, nice and short. There's a pop there on cattle and hog. We already saw that. Sideways on hog, wheat corn, nice short. After that big long, we retraced almost 50% from that. This is a different way that we look at the markets. I teach people this, is heating oil versus crude. It's done nothing but gone up since almost a couple of months. Short nat gas. I was wrong on a commentary on that, and I should have been looking at my own charts. Platinum. So that's that. I'm not going to get too much guys into that. I want you guys to see the potential. If you want to intraday trade, you can do it using these tools. Again, people that say hindsight, they just don't want to learn, or they have something else that they're trying to sell you. Trust me, this stuff is free. You can pick this stuff up and learn it on your own and start seeing these patterns, start seeing where the big money, how they work, where they sell value, where they buy value. And then you can go into your smaller time frame and you don't have to be lost, and you can try to start figuring out at that point what to do with yourself, what to do with your trades. Here's the Russell 2000 futures. You know, we were uptrend end of the day, just like all the rest of the equities. Here during the day, it was going to be all short. Your linear regression lines would have been there, and you could have been taking all that stuff short from up here. You're going to have losing trades? Of course you're going to have losing trades. But if you have a good plan and you have an ATM strategy in place, your winners will be bigger than your losers, and you'll walk away green almost every day. Some people say it's impossible. I know people that do it every day. I don't walk away green every day myself. But I know people that are better than me that walk away green every day. I'm starting to get there. So I don't understand what people are talking about. Like I said, to each his own. So that's it. That's my little comeback, little video for the week, guys. Let me tell you what I'm going to be doing. I'm going to add inside of our playlist. I'm going to add a Futures Foundation videos where I'm going to teach everybody that comes in new for free Futures Foundation information. You can get it anywhere anyway. But people that want to work with me, I'm going to have all that stuff up in here coming up, all rolling out in the next month. And then from there, I'm going to teach you my intraday strategy. And then if you want our templates and everything, we'll help you out with that. And you can just keep watching these videos and just build them out yourself. And once you get good at it, at your sim, go live. It's really not that difficult. Could we anticipate a short Sunday tomorrow? With the news we just got from coronavirus hitting a whole new strand in England as of today. Looks like that'll just go right on along with the price action, wouldn't it? Where does it look like price is? At an extreme. Can we break down, gap down for tomorrow? Sunday open? Very likely. But see, if you were just looking at the charts, you don't even have to hear about anything on the news or any of that. Just follow your charts. What's your highest probability? Where's your money management? Where's your stop? How many times are you gonna give up on your first trade and say this stuff don't work? It's a rig, it's a scam, or are you gonna put on 3-4 trades before you walk away so you can, with a good strat and a good ATM strategy to get you out of your trade and walk away good and green or scratch for the day? You don't even need to know what's going on out there in the news. So, my 2 cents. This is a longer video coming back from a vacation to share with you guys the charts. What you got to do, what you should be looking into. Look where the big money is. Where are they? What are they doing? What are they looking at? They're looking at something. They're not just buying blindly. They're not just buying because somebody called them on the phone and said 2 million on Russell. Hell no. They're buying something in value. They need to see where the price is first, okay, to buy or sell value. Think about that for a quick minute.